Julia, let's go to you first and sort of set up what we heard last night.
Well, Netflix may have beat on earnings per share, but that seems like that was largely because of the higher prices that the company has rolled out over the course of the year. There are big questions, though, about subscribers. International subscribers were better than expected. Domestic subscribers fell short of expectations. And then guidance for the fourth quarter, those subscriber numbers were light. But CEO Reed Hastings said that they were taking into account all the competition that was launching. He also stressed that they've been preparing for this onslaught of new rivals for years, really saying that they're ready to go, and all their investment in original content, especially here in the U.S. in movies, should really help make them more valuable to consumers.
Mark, I realize that we're off highs of the morning for Netflix, but the move we have seen, given the quality of these results, does it make sense to you?
Yes, just because the fears were so great going into the quarter. There were widespread calls across the street for them to miss international sub numbers by 1 to 2 million. That didn't come true. So that's why you had the first relief rally in the stock. I think there are two negatives here, though, to really focus on. One is that looks like we've hit peak sub ads for Netflix, and that probably happened in 2018. And secondly, the company probably doesn't have as much pricing power as it thought it had, and bulls like me thought that the company had. They had elevated churn for not just one quarter, which is sort of what they've had with prior price increases, but for multiple quarters, 2 quarters. I think they still have pricing power in the future, but they're going to have to work harder on the content slate in order to justify future price increases. I think that's one of the big takeaways, and it's a negative from the quarter.
Mark, how low can domestic subscriber growth or even domestic subscribers go before it becomes a problem for how you're modeling this company? Because it seems like they charge domestic subs more, right? And that's part of what's fueling their ability to buy and create all this content. International subs largely, I imagine, bring in less revenue. So even though those grow, they don't amount to as much, do they?
No, you're right, John. So I guess 2 points. I think they'll need to continue to grow U.S. subs. We think they can. They've grown U.S. subs at a clip of, close to 5 million for 5 years. That clip now is probably 2 to 3 million for the next 2 or 3 years. So at least that's what we hope is the case. If they don't grow subs at all, that's going to be an issue for the stock. But the game now on for Netflix is international. It's like 90% of their sub growth. They are rolling out 130 original language a series for international markets for about 30 countries in 2020. And by the way, for global streaming companies, that's what you're going to have to do. You're going to have to roll out local language services. So Netflix is ahead of the curve, ahead of the game there. But that's where the growth is going to come from. Yes, it's lower ARPU, but there are plenty of markets where there isn't that much ARPU dilution. I think there was a little bit too much made out of these India subs that were added. The ARPU growth in international markets kind of came in line with expectations. We think they have pricing power in international markets just like they do in the U.S., but they're going to have to work hard on building out that content slate. But the game is international.